two of the most popular investing apps in the world. Both free to download, both designed for beginners, but they work completely differently. And picking the wrong one could cost you thousands of dollars over the next decade. Today, I'm breaking down Acorns versus Robinhood, what they actually do, who each one is built for, and which one is going to grow your money faster based on where you are right now. I'm going to give you a straight answer at the end, not a wishy-washy, it depends. You'll know exactly which one to open by the time this video is done. I'm Roger. Let's get into it. Before we compare them, let's make sure we're clear on what each app actually does, because they are not the same type of product. Acorns is a micro-investing app. It's built around one idea: make investing so automatic that you never have to think about it. The signature feature is roundups. Every time you spend money, buy a coffee for $3.75, Acorns rounds it up to $4 and invests that $0.25 automatically. Those tiny amounts add up. And beyond roundups, you can set recurring daily, weekly, or monthly investments. Acorns then puts your money into a pre-built portfolio of ETFs, diversified, low-risk funds based on your risk tolerance. You don't pick stocks, you don't make decisions, it just runs. Robinhood is a self-directed brokerage. It's built around giving you control. You decide what to buy. Stocks, ETFs, options, cryptocurrency. Robinhood lets you trade all of it commission-free. There's no automation unless you set it up yourself. No pre-built portfolios, no hand-holding. You're in the driver's seat. So right away, you can see these apps have a fundamentally different philosophy. Acorn says, trust the system. Robinhood says, you make the calls. Let's talk fees, because this is where most comparison videos get it wrong. Acorns costs $3 a month for the personal plan. That's $36 a year. Now, $36 a year sounds tiny, but here's the math nobody shows you. If you only have $500 invested in Acorns, that $36 fee is actually 7.2% of your balance every year. That's enormous. It eats your returns before your money has a chance to grow. Once your balance gets to $3,000 or more, that $36 becomes just 1.2%, much more reasonable. The bottom line on Acorns fees: it's expensive when your balance is small and gets better as your balance grows. Robinhood has no monthly fee, zero. You pay nothing to hold a basic account. They make money through Robinhood Gold, a $5 per month premium tier, and through payment for order flow, which is a behind-the-scenes mechanism most beginners don't need to worry about. For most beginners, Robinhood costs nothing. Fee winner, Robinhood. Especially when you're just starting out. This is where Acorns wins, and it's not close. Acorns is genuinely one of the easiest financial apps ever built. You download it, answer 5 questions about your goals and risk tolerance, connect your bank account, and it does everything else. There are no decisions to make after that. No charts to read, no stocks to research. For someone who has never invested before and finds the whole thing intimidating, Acorns removes every barrier. Robinhood is simple compared to a traditional brokerage, but it still requires you to make decisions. Which stocks do you buy? When do you sell? What's an ETF? What's a limit order? If you don't know the answers to those questions, Robinhood can feel overwhelming. And the danger is that beginners make emotional decisions, panic selling when the market drops, chasing hot stocks, and end up losing money. The app itself is clean and well designed, but the decisions it requires are not beginner friendly. Ease of use winner, Acorns, by a mile for true beginners. Acorns gives you 5 portfolio options, ranging from conservative to aggressive. Each one is a mix of low-cost ETFs covering stocks and bonds. That's it. Simple, diversified, and historically solid. Robinhood gives you access to thousands of individual stocks, ETFs, options contracts, and over 15 cryptocurrencies. The entire US stock market is at your fingertips. If you want to buy Apple stock, Tesla, an S&P 500 index fund, or Bitcoin, Robinhood does all of it. If you want to just set it and forget it in a diversified portfolio, Acorns handles that better. Investment options winner, Robinhood. But more options isn't always better for beginners. Here's the question everyone actually wants answered. Which one grows your money more? The honest answer is, it depends entirely on your behavior, not the app. Acorns invests in diversified ETF portfolios. Historically, A moderate Acorns portfolio returns somewhere between 6 and 8% annually over the long term. Steady, reliable, boring, and boring is good when it comes to investing. Robinhood's returns depend 100% on what you buy. If you put your money into a low-cost S&P 500 index fund on Robinhood, you'd match or beat Acorns with no monthly fee. That's actually the ideal beginner move on Robinhood. But most beginners don't do that. They buy individual stocks. They trade in and out. They try to time the market. And studies consistently show that individual investors who trade frequently underperform the market by 1.5% or more per year. So in practice, beginners who use Acorns often get better results than beginners who use Robinhood. Not because Acorns is a better product, but because Acorns prevents you from making bad decisions. Growth potential winner, tie, but Acorns wins for most beginners in the real world. Okay, here's the straight answer. I promised you. Choose Acorns if you are a complete beginner and have never invested before. You want something fully automated that you never have to think about. You tend to make emotional decisions with money. You want to build the habit of investing before worrying about what to invest in. And your goal is long-term wealth building, not active trading. Choose Robinhood if you already understand basic investing concepts. You want to buy index funds like VOO or SPY with no monthly fee. You're interested in learning how the stock market works. You want access to crypto or individual stocks. And you have at least $3,000 to invest so Acorns fee doesn't eat you alive. My personal recommendation for someone starting from zero, start with Acorns for the first 6 months. Let it run on autopilot. Build the habit. Once you have $1,000 or more invested and you're comfortable with the basics, open a Robinhood account and start learning how to invest in index funds directly. You don't have to choose one forever. Use both. I'll leave links to both apps in the description below. Acorns gives you a bonus when you sign up, and Robinhood gives you a free stock just for opening an account. Both are worth grabbing. The best investing app is the one you actually use. It doesn't matter if you pick Acorns or Robinhood. What matters is that you start today with whatever amount you have. Waiting for the perfect moment, the perfect app, the perfect market conditions, that's the thing that actually costs you money. Every month you wait is a month of compound interest you'll never get back. Pick one. Open the account. Start with $5 if that's all you have. The habit is what matters. If this video helped you, hit subscribe. Every week on Wealthy by Default, I break down money in plain English so you can make smarter decisions faster. Next video. I tracked every dollar I spent for 30 days. Here's what I found. You might be surprised. I'll see you there.